Welcome to Illuminati Silver. We tell it the truth about silver. Today is Wednesday, the 13th of January 2021, and we're looking at some economic news which may have fallen under the radar in the last few days because of what has been happening politically in the United States of America. So let's take a look. Yesterday we published the first part of a three-part series entitled Platinum 2021 Price Forecast, Part 1. Unfortunately, we scheduled it to go out at what we thought was going to be midday yesterday, and it turned out to be midnight, so it never really got off the ground. So we list it below in both the description box and comment section, as it appears that YouTube, because of when it was published, did not promote it, and as it really came out at the worst time in the 24-hour calendar. So please, if the issue of platinum is of interest to you, do take a look. And we would seriously suggest that you should at least consider it, as it could potentially be quite costly to underestimate the potential for platinum price rises in 2021 and 2022. Now, the time of writing the script for this video, it's 10:15 GMT, and by the time it's published and launched on YouTube, it will more likely be closer to 11:30 or 12 o'clock today. At the moment, gold is standing at $1,855, just $6 higher than Friday's close, and silver is standing at $25.46, currently 4 cents lower than Friday's close. Of course, we're all aware that the news headlines are swamped with news about President Trump's possible impeachment, details of which will come out later this afternoon, and the latest on what is happening with regards to COVID-19, the coronavirus pandemic, and the various vaccination programs. The problem with this, of course, is that very little attention is therefore being given to underlying economic news that is going around not only in the United States, but also the rest of the world. But as far as the US is concerned, we pointed out in our weekly update on Saturday that most of the relevant economic data will be published on Thursday and Friday, with Friday being the heaviest of the two. Yesterday, though, we saw that the NFIB Small Business Index published its figures for December, and they were not good. A figure of 95.9 compared with 101.4 in November. We also saw job openings fall from 6.6 million in October to 6.5 million in November, and clearly we're expecting an even worse figure for December when that is announced next month. Later today, we have the Consumer Price Index and core CPI figures being announced for December. They might actually prove quite interesting. So what else has been happening in the US economically? Well, the dollar was under pressure yesterday and very early this morning as 10-year Treasury yields fell more than 6 basis points from a 10-month high, as fears about a continuing declining dollar starts again to gather some momentum. Though in the last few hours there appears to be some stabilization. Now, the two videos we posted on Monday, US dollar decline and debt clock part 1 and US dollar decline and debt clock part 2, deals with this very issue. And we've seen that the dollar is posting its sharpest daily fall against the euro in more than a month, and also has fallen at 1% against sterling, as the governor of the Bank of England yesterday talked down the prospects of negative rates in the UK. And bear in mind that the UK's main rate, or what we call the bank rate, is currently only 0.1%. So it must be quite brave for the governor to turn around and say that he doubts very much that we will move into negative interest rate territory. The Australian and New Zealand dollars rose from 1 week's lows, lifting the Aussie above 77 cents again to sit at 0.7758 to the dollar, and the Kiwi over 72 cents to trade at 0.7220 to the dollar. Now we've placed links to the US dollar decline debt clock videos below. Now the dollar index is currently steady at 90.004, just holding above 90 after falling 0.5% yesterday. And it's still therefore not far above last week's nearly 3-year low of 89.2. And frankly, we do, in time, expect that low to be breached. Asia-Pacific markets closed overnight, broadly higher. US markets closed higher yesterday, around 0.2%. And UK and European markets are up around 0.1% this morning. So you can see how fragile all of these are currently. Though marginally higher, it's an infinitesimal amount. Now, Christine Lagarde, the new ECB president, confirmed today that the European Central Bank's forecast of an economic rebound this year still stands, despite fresh restrictions to activity in several Eurozone countries, providing those measures are lifted by the end of March. Quote, "I think our last projections in December are still very clearly plausible. Our forecast is predicated on lockdown measures until the end of the first quarter," unquote, Lagarde said in an interview at the Reuters Next conference. She added it would be a concern if curbs to economic activity continued into the second quarter. Well, our view is that she is perhaps being a little optimistic, bearing in mind the relatively slow pace of vaccine rollouts so far witnessed in many countries. But time will of course tell. Now, under pessimistic assumptions on the duration of new lockdown restrictions to contain the spread of COVID-19, Bloomberg Economics lowered its first quarter estimate for the euro area economy to a 4.1% contraction after a 1.5% drop in the final 3 months of 2020. So Bloomberg at least is assessing a significant contraction. That will mark the second technical recession in the region as a result of the pandemic. But as inoculations gather pace and allow restrictions to be eased, Bloomberg Economics forecasts growth of 4.8% in the second quarter and 3.1% in the third. So what we've noticed generally is that most forecasters are predicting a revival of economic growth in 2021. And that seems logical, providing, of course, the vaccines work and lockdown restrictions are eased. Whether it's going to grow at the pace that they predict or as quickly as they predict, no one really knows. But it is worth bearing that in mind when you're considering investment decisions and what impact this information could have on what we call more risk-on assets, such as equities, for example. Now, going to the UK, Persimmon plc, the UK's biggest house builder, said that the long-term outlook for the country's housing market remained resilient despite the economic gloom and latest national lockdown. The firm delivered its upbeat assessment as its reported full-year revenue of £3.3 billion, or $4.6 billion, in a trading update today. And what's relevant here with regards to property in the United Kingdom, for those who know this market quite well, are aware that literally for decades, not just years, but decades, the ability of our house builders to build enough properties to deal with the growth in population has failed miserably. And us also having a relatively restricted land mass, and part of that land being classed as green belt and therefore should not be built upon, further restricts the ability of house builders to achieve their economic and production aims. That bodes well for higher house prices, certainly over the medium to long term. Now, as far as China is concerned, and the Far East, We've seen today that the United States has cancelled a top envoy to Taiwan, though a couple of days ago it did lift restrictions on contact with it. The UK government is under increasing pressure from top Conservatives to adopt a harder stance on its policy relationship with China. And we shall see how that pans out over the course of the next few months. And India, the electric car maker Tesla, has registered a company in India, suggesting that it may soon launch there. Now back to the United States. According to Bloomberg, quote, Federal Reserve officials are beginning to split over when they may need to start pulling back on their massive monetary stimulus, drawing nervous glances from investors who remember how markets were roiled during the 2013 taper tantrum. In the past week, 4 of the Fed's 18 policymakers have publicly raised the prospect they may discuss reducing bond buying, currently running at $120 billion a month, by year's end. In contrast, several others have called the debate premature, and Fed Vice Chairman Richard Clarida, the most senior central banker to weigh in, has said he doesn't expect any changes before 2022. Investors taking no chances have pushed up yields on longer duration treasuries, steepening the spread between rates on 2- and 10-year debt to around the widest in more than 3 years. They may get more guidance in the coming days. Clarida and Governor Lael Brainard both speak on Wednesday, that's today, followed a day later by Chair Jerome Powell in his first comments of the year, unquote. This, obviously, in time will have an effect on the US dollar value and ultimately on the prospect for growth or demise of gold and silver prices. The news globally tends to rest between things that are bad now but are likely to get better, providing the vaccination program across the globe is rolled out quickly and efficiently, and that, of course, no mutant strain can avoid the vaccination efficacy. Perhaps going back to politics for one brief moment before we close this video, disturbing for President Trump, soon to be former President Trump, as he then steps back into his business, is that yesterday Deutsche Bank has announced that it will not do business in the future with him or his companies in the wake of his supporters' assault on the US Capitol, or so the New York Times has reported. If this is true, this could prove quite devastating for the Trump organization, as Deutsche Bank was not only the major financier for his entities, but virtually the only financier. Now, whilst this is not major economic news, it does portend to the difficulties that Donald Trump and his family will be facing after the 20th of January. That's it for now. We've no doubt that certainly politically there are both exciting and disturbing days ahead. And let's hope there is no violence. Later today or early tomorrow, we shall be publishing part 2 of our platinum price forecast for 2021. And as mentioned earlier, if you've not had an opportunity to listen to part 1, we have provided a link below. Meanwhile, thank you so much for listening. If you haven't already done so, kindly subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, We are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.